Oh, hey, everybody. Dan here, stockmarketmentor.com. And I want to look at Google today. Hopefully you can see why. Now, this stock has been kind of flirting with breaking out for a while. And it looks like now, we're going to consummate the relationship. The 50-day is crossed above the 200-day moving average, which is a good thing. If you look at this really, really closely, not that you really need to, the 200-day moving average is just starting to move higher. So if you're doing screens in this way, this is going to pop up on your screen. But the bottom line is this: you can see this thing has created one big long bull that's gone back, that goes back to last August. And so if you just want to look at the oscillations here on this, I would have to say that the selling's pretty much over. These big volume spikes or these downward spikes here are pretty much over. This bounce off of these trend lines repeatedly is pretty much over. And what does that leave us with? Well, what it leaves us with is a breakout. And so what I plan on doing, because I'll be honest with you, I didn't see this today. I mean, I watch it, but I just had crap to do, not at my desk all day long, believe it or not. So I missed this move. And so then as I've been going through my, through my lists that I look at after the market closes, this is the one that really jumped out at me. So I'm giving this to you hopefully early. Yesterday, the stock came very close. It did kind of break out. It actually popped up on my screen then, but then it pulled back and had a really crappy close. Today, though, we've got institutional buying. Earnings are not an issue. So I'm looking for more upside here. If you are so inclined, you can even buy the stock with less than a 5% risk. You put your stop below. I'd give it a little more room than today's intraday low, though you really don't have to. I would put the stop below yesterday's intraday low on this. And you could say, well, why don't you just put it, what about the 50-day moving average? And I would say, well, sport, the 50-day moving average really isn't relevant to the actual trade. It is with respect to where the stock is. But if I'm buying the stock here, and I have to wait until the stock goes down here before I acknowledge that I'm wrong, I'm not going to last very long in the trading business. I need to have a reason for my entry, and that would be a breakout. And because I know what my reason is, I also know when I'll be wrong. And when I will be wrong is if the stock reverses enough to totally undercut the breakout. So this is where you're buying. This is where you're putting your stop. Basically, end of story. Now, by the way, I had a lot of people sign up for Option Market Mentor to get in on a class that I taught. It was a free class for Option Market Mentor members. And so if you happen to be one of those, welcome. And I will also say, if you missed last night's session, it was a little over 2 hours, actually. If you missed that, just go into the Option Market Mentor forum and you can get the link there. To those of you who did miss it, because you weren't members, I'm not talking about members who didn't have a chance to show up live, you're good. But you will be able to get that same course. It'll be out in probably about a week, and it'll be $1,000. So anyway, kudos to the OMMers who are in there now, and I will see you at that very same place tomorrow.